afternoon, everybody. Thanks for coming. I'm Mac Taylor, Legislative Analyst. And just a little while ago, we put out our overview of the May revisions, a document we put out every year to give the Legislature our sort of initial impressions about the May revisions as they finalize their work on the budget in the coming weeks. I want to thank all my colleagues for their help in putting it together, and particularly Jason Cisney over here, a deputy of our state and local finance section who kind of spearheaded the report. I think probably the big news in the report is our estimates of revenues. We do update our economic, revenue, and expenditure projections. We are estimating that over the 3-year period, and by that I mean 2011-12, 12-13, the current fiscal year we're in, and the upcoming budget year 13-14, for all 3 years combined, we're above the administration by $3.2 billion. That is almost all in 2013-14, 2.8 of it. It's almost all of that is in the personal income tax. And the single biggest issue or difference that we have with finance is related to capital gains. Clearly the markets have been doing extremely well in the last 5-6 months in particular. And we've tried to reflect that in our updated revenue forecast for capital gains. We're not sure that's the case with finance's number. It doesn't seem to have captured that recent improvement in the markets, and that's why we have a difference with them. As all of you know by now, having come to these meetings for many times, capital gains is the most volatile source of our income tax and, frankly, our revenue structure. And so having big differences between the administration and our office are not unusual, but this is a fairly significant one. But we've taken our best shot at what we think will happen in the coming few months and what that will mean for revenues for the 13-14 fiscal year. Now, the current year, 12-13, is a pretty unusual one, and you guys probably realized that after the May revision came out, where you had roughly $750 million in additional tax revenues in the May revision that the governor was forecasting, and yet Prop 98 was going up by about $2 billion. And the reason we're in sort of an unusual year is because of the so-called maintenance factor payback. These are obligations under one of the tests when we're going along in prior years based on the economy. If we go below that level, you create what's called a maintenance factor, and you have to return back up to a prior level in future years. Based on an interpretation that the governor proposed at the start of this fiscal year and the legislature adopted, we pay back maintenance factor in a way that really magnifies our fiscal problems. That is, almost every dollar of new money that comes in goes to schools. That's good for schools, but not so good for the rest of the budget. And I think that's what was happening when the May revision came out as to why you had additional monies coming in, and yet the rest of the budget was basically in about the same place. In fact, were it not for savings in debt service and increased property tax revenues, the rest of the budget could have been worse off in the May revision because of this maintenance factor interpretation. The implications of this are really important as the legislature considers our revenue estimates. Because even though we have quite a bit more money, particularly in the budget year, once again, because of the maintenance factor interpretation, the vast majority of that $3.2 million would go to schools. We estimate about $2.4 billion of the $3.2 would go to schools. Now, that's great for schools, obviously, but they're already experiencing large year-to-year increases. And for the rest of the budget, it would leave relatively little for anything else that the legislature wanted to do, whether it was spend on non-98 programs or avoid extra borrowing or build up the reserve. Most of it would have to go to schools. So it's created a rather awkward situation, and it certainly limits the legislature's flexibility in dealing with these new monies that either are going to come in or we're projecting to come in, either under the administration's or our estimates. So just a few comments on our overall assessment. The governor has taken a cautious approach in his budget, and overall we think that's a very wise thing to do, just as we've been saying for quite a while. We need to be disciplined. We've dug out of a big, deep hole, and the last thing we want to do is start another one. And I think the governor is wise in being very cautious in making additional commitments until we're sure that monies have come in. We do raise the issue of an alternative way of thinking about the maintenance factor that we wrote about a year ago. We actually have a document out on it We think it's a much more reasonable way to think about maintenance factor. It's in keeping with the way that we've done that calculation for decades. It's still, we think, fair to schools. It still gives them more money. It just doesn't mean that more than $1 of every new revenue buck that comes in has to go to schools. If the legislature were to adopt that alternative way of paying back maintenance factor to schools, it would greatly enhance their fiscal flexibility. And let me give you the most obvious example of how it would do that. Because capital gains are so volatile, can vary from year to year, you never know when there's a market correction, it is really important that the legislature build up its reserve right now. This is the time. We've got new revenues come in. We know that they're largely from capital gains. This will be a great time for us to build up the reserve. With the maintenance factor interpretation in place, the money is not there to even have that choice to put it in the reserve. And even under our added revenues, they still would not have that choice because most of it would have to go to schools. Again, great for schools. That's a good thing. Not so good for the rest of the budget and the legislature trying to balance its varying, priorities. So, for example, if they took our interpretation of the maintenance factor, and even if they just took the governor's revenues, they didn't even take our higher revenues, they would have money potentially to double or triple the size of the reserve, avoid borrowing the $500 million from the cap and trade revenues, and still have some monies left over to do some targeted augmentations for whatever programs they felt were appropriate, whether it were the courts or a health program or social service program, or give more money to the schools. They can always over-appropriate. So we would encourage them to just take another look at that issue. We realize that they made a decision at the start of the year, but the fiscal year is not over. So that's something that they could do because it would certainly help them if that flexibility were used wisely in preparing them for the out years. Lastly, let me just comment very briefly. We did our multi-year forecast where we look out and take the governor's policies, our revenues, and kind of look at, well, what does the fiscal landscape look at over 4 years? And it's very similar to what we have had in recent years, last November and even months before that, where the fiscal outlook looks very promising. We have operating surpluses that grow in the next 3 to 4 years. And what that says to us is it's really an excellent opportunity for the legislature to finally address not only some of the governor's priorities, the wall of debt, which are those sort of budgetary liabilities that we've accumulated, but to also address our retirement liabilities that we've written a lot about, whether it's the CalSTRS problem or our retiree health unfunded liability. Building up a reserve we put out there is a very high priority. We're several years into recovery, and even though it's been a moderate one, we need to start building up that reserve so that we're in a better situation the next time things turn south. So with that, I'd be happy to answer any questions.
Mac, there's another factor in that school situation. I think the governor's obviously trying to overhaul how the money is distributed, not only how much money there is, but how the money is distributed. And the resistance to that says there's not enough money to go around. You shouldn't be doing that. By having, if your revenue estimate is accurate, and you have a couple of $1 billion more, or $2.5 billion more for schools, would that not also ease the pathway towards what he wants to do, because it would raise all the boats in the situation?
Yeah, I think it would obviously give them more flexibility. But the caution would be that if you then increase your ongoing school obligations, what happens if we're wrong? What happens if revenues are less, even if it's not at finances level? What if they are down? You've now made commitments to schools that you can't maintain necessarily in the near future. And so if they were to take our revenue estimates, we would really caution them to be very careful about their 98 commitments, to try to either build in a 98 reserve, use deferrals to build in some slack in there such that if you do have a drop in revenues, you can drop that minimum guarantee back down so that you haven't overcommitted for the future.
One question with the schools thing. You mentioned of the $3.2 billion, you said $2.4 billion
over the 3 years.
Over the 3 years. How much in the budget year might go to schools?
I think it's 1.5. Jen or Edgar, help me out if that's. I think that's a roughly.
Yeah, it's about 1.6.
1.6. Thanks.
1.6 billion out of the 2.8.
Out of the 2.4.
2.4 billion in 2.4 in the 13-14 year.
No, I'm sorry. 1.6 in the budget year out of a total over the 3 years of 2.4.
Okay.
Can you break down, it's 3.2, 2.8 in the coming fiscal year. What is the additionals in the previous 2 years?
Yeah, I think it's minus 300 in the 11-12 year.
Okay.
And it's about roughly 700, just under 700 million plus in the current year.
Do you recommend postponing the core, the Common Core implementation?
No.
No?
No, I think we just raised some questions. I mean, we went from no money for Common Core to $1 billion. And I think the legislature first is just going to have to figure out, it has other one-time needs that it could use some of those or all of those on, paying off mandates or paying off other obligations. So it needs to make that decision. Is that the highest of the various one-time? And then clearly they're not going to be spent right away. They'll be spent over the next couple of years. Do you need that much money? What sort of requirements do you want on them? And so we're taking a look at that. But right now it's a reasonable use of some monies, one-time monies, because there will be some additional costs. And I think it's just a question of how much and what are the other priorities.
Do you take a position on the concentration grant within the LCFF?
Well, you know, we've said earlier that we thought it's a reasonable thing to do. We wanted to focus a little bit more on the really concentrated, over 75% kids that seem to have even more problems, because most schools have close to 50%. You weren't concentrating a lot. And so we would have focused the concentration grants on those schools that really had very high concentrations of low income. But in general, we didn't have a problem with the overall structure of his LCFF. Jim?
Mac, if I understood you correctly, of the 3.2 billion additional, 2.4 billion will be committed to schools under the current interpretation of maintenance factor. If they used your interpretation of maintenance factor, how much of that 3.2 billion would be freed for other uses? Do you know?
Boy, Jen and Edgar's going to have to help me on that one. That's because it depends on whether it's relative to May revision, relative to January. It would be a lot of it. Let me put it that way. Edgar, can you right off the top?
It depends on what decisions you make in terms of how much you want to fund it in the 13-14 year. But just by freeing up by not having to make the $2.9 billion payment in 12-13, that frees up $2.9 billion just from there. And even if you funded schools at the same level in 13-14, you have $2.9 billion more that you can use for other activities.
It frees up a lot of money.
Okay.
And the point is, you can use that to you could over appropriate what you otherwise would have to spend and still have a lot of money for other needs. And I think, again, if they were to do something like that, we would really stress the importance of putting a lot of that money into the reserve.
So when you say reserve, you mean the Prop 58 reserve?
Yeah, I mean, call it what you want. It's just a reserve that's not spent.
And of that $3.2 billion, I know it's over the 3 years. My understanding is 2.8 billion of that is in the budget year.
Yes.
Okay. The other two parts are in 11-12 and 12-13.
Exactly.
Okay.
Matt, could you talk a little bit about taking the Common Core and the school side? He seems to be borrowing in this budget. He takes the cap and trade money, and then in future, he's sort of like, he does pay down some of the wall of debt, but then in 14, 15, he stops paying down the what do you call it for the schools?
Well, there's settle up.
So
Mandates.
he stops paying some of it. Is he borrowing too much in future years by spending this? I mean, he's...
Well, remember, the other issue on the cap and trade is he already had $500 million in savings. He just did it by using the money to offset expenditures that existing general fund expenditures. So his trading off, not doing the offsets with the loan, it's the same, right now, the same general fund implication as far as savings. It does create an obligation, though, to pay it back in the future.
So that's borrowing.
That is a type of borrowing, and I think they acknowledge that.
Yeah.
I don't know, Jason, if there are other... That's the single biggest one, I think, though. But it is borrowing. It does create an out-year obligation. And given that the programs that are supposed to be funded by that are to try to reduce greenhouse gas emissions by 2020, it's a question of, well, how long do you borrow that without the program actually doing what it's supposed to be doing with the monies? So there are issues related to the program and the loan.
But he also doesn't start paying back or doesn't completely pay back some of those other special funds that he borrowed extensively from, that we owe a lot of money. So aren't we still just living on borrowed money?
Well, we do have a lot of special fund loans out, and he has a plan to pay back, I think, all but the 500 by the end of the forecast period. So if you're questioning how fast he's doing it or not, but obviously it would be better if he didn't have to do any more new stuff. Remember, under the existing maintenance factor formula and the governor's revenues, he wasn't able to do much. He had to fund schools. There was nothing left over. In fact, he had to come up with some additional solutions. And there were some things that happened on the natural. Debt service costs were down by almost $500 million. If you didn't have those kind of things, he might have had to take more solutions in order to keep the non-98 part of the budget in the same place it was in January. By doing these other actions, he was able to, in effect, keep them where they were. They didn't have to take additional cuts. But that's how sort of bizarre a kind of situation we've gotten in because of this maintenance factor interpretation.
So,
Max,
I'm sorry, you go ahead.
Okay, I'm trying to get more to the root of this pessimism. I see, and you say here that the administration's economic forecast data generally reflects the recovery, but the description seems unduly pessimistic. Are you saying that they just jump to a conclusion that's not justified by their data?
Well, if you look at their data and their forecasts for the economies at both the national and the state level, we're very similar. And in our view, our take on the economy has not really changed much since January. You had the sequestration, which was a minor negative, but you had other things that were positives. And frankly, at the California level, we're probably a little more positive because of housing sales, employment, and of course, the thing that swamps all of that is the improvement in the stock markets. So it seemed to us that the economy was pretty much the same as it's been for a while, and yet we got a lot of comments from people asking us, well, why does the administration seem to be more pessimistic, that have things gotten worse? And that's why we raised the question of we don't think things have gotten worse.
So, I mean, it sounds like what you're saying, if I understand correctly, is that the administration and your office are looking at the same set of numbers, but drawing separate conclusions about the trajectory going forward.
In part. Mm-hmm. And again, it may just be part of the administration. As we said, it's taken overall on everything of when they have spending, make sure it's one time, still try to pay down things. They've taken a cautious approach, and we don't take exception to that at all.
Right.
It was just trying to reconcile what we thought was the way they were characterizing the course of the economy with our lack of differences really in the fundamental numbers.
Why do you think the governor is doing that, taking that more pessimistic view?
I wouldn't want to speculate on
You don't have
people's
him on the couch
intentions.
or anything like that?
No, I haven't had a session with on it.
One more question about the estimate. So it sounds like what you're saying is that maybe the legislature shouldn't use your revenue estimates when they put together the budget.
Do we say that?
It sounds like that's what you're saying.
Well, I think to be fair, it was part of our caution. After we say, it's generally it's wise for the governor to take a cautious approach. I think again we feel kind of locked in by this maintenance factor formula, and so we do talk about if you do take our revenue estimates because of that maintenance factor formula, you don't have the flexibility to be cautious in a different way. That is by building up your reserve. If you're concerned about our revenues, it does carry more downside risk than the administration's, even though we think it's a reasonable approach. Because they're so much lower.
Because if it doesn't come in.
If it doesn't come in, then where are you?
Right.
And so we're not saying don't use it. We've always presented our revenue forecast as giving the legislature another take. And as you guys know, in some cases we've been far below the administration. In some cases we're above them. And in recent times where there haven't been huge differences. And so we're always just trying to give them another take on it. And they can use that information however they want. But it's a very different situation, I think, and you raise a good point, that if they don't change the maintenance factor interpretation, they'll have to be very careful about assuming higher revenues.
Didn't you say something about that your revenue projections captured something that the administration's projections didn't?
We felt like our capital gains reflected better what's been happening in the last 5-6 months.
And that's because why? You have different numbers, or?
In just our ultimate numbers, finance's capital gains actually go down from 2013 over 2012, and we're not sure how they get there given the rise in the stock markets. If they had just put out that number back in January, you could see that they were just being careful and they haven't had the run up yet. But we just think ours maybe better reflects the recent run up.
Mac, if they changed their interpretation of the maintenance factor, would they be exposing themselves to some legal risk?
Well, again, if you refer to our report that we put out a year ago, Jim, we tried to talk about the logic behind our interpretation, that we thought it was in keeping with what the voters had been told about it. We thought it was in keeping with the internal logic of the way 98's constructed, and we thought it avoided some of the bizarre kind of circumstances by adopting the administration's approach. We had it, there's a flip side of when you create maintenance factor, that there's a really sort of unusual, absurd results that can apply if you use their approach. This is on the paying off that you get these really sort of hard to understand of what public policy is served by giving schools 103 cents for every new $1 that comes in. So we thought we made a good policy argument, and we think that the language can be interpreted. So we wouldn't say there's much of a legal risk, but who knows?
Do you know what it would take practically to do that?
It's very simple. You can do it through budget bill language.
On the cap and trade borrowing, do you have a specific recommendation on whether the legislature should accept that, reject that?
You know, I think we haven't even talked about that as of yet. I think what we would look at is if you're going to borrow 500, you're borrowing all the monies. Mm-hmm. And so I think we just want to raise questions such as, when is the program going to operate? Is it going to in any way impair that program? And then more of the questions of Michael, just the borrowing, if you could avoid doing that altogether, that would be better. But clearly the legislature and the state has the ability to temporarily borrow funds. It could only be under the circumstances that they would have to pay them back if the program needed it. So I think we would raise more questions about, well, if we're taking all the money, what is the program? And is that going to in any way impair the ability to do what the program was supposed to do?
In the original plan with the $500 million offsetting current expenses, did you ever see a path to get to that number based on the current activities related to greenhouse gases?
No, they had assumed that $200 million in one year and $300 in the next would be offset, our existing expenditures. We could never find more than like about $100 million. And I think, I'm not sure, they didn't have a specific plan yet, but you know, we're open. If you can find activities that you're doing, certainly those would be eligible for payment, but we haven't seen that to date.
And the ARB has put out a revised list of potential activities, even adding those up, we're looking at those. They didn't have numbers with them, but...
I don't know, Anthony.
No, they didn't have numbers. It was sort of their investment plan, what activities they didn't have dollar amounts.
Mm-hmm.
When was the last time that you guys were more optimistic on revenues than finance? It seems like that hasn't typically happened lately.
I don't know, Jason can...
Yeah, it's been a while.
It happens.
Yeah, it does happen. And I think that what also kind of hides certain things is that we may be up on one tax and down on the other, and they can tend to cancel out. So I think it's helpful, though, to have a different perspective on each tax and then cumulatively what that means. But we have gone both ways. I'm sorry, I just can't answer.
And another question kind of like that, how long has it been since you've had such a wide gap? I know $3.2 billion is really only 3% of the budget, but
well, especially over 3 years.
Over 3 years, but it still is significant.
It's a significant one in the budget year.
You know, how long has it been since you've had something so significant?
Last January and February.
Last January and February. Wow, so long.
Yeah, that's right.
Well, you may remember in the trigger, the whole trigger
January
debate in November,
2012.
we had significant differences. We were below in that case.
Matt, what's the harm to the overall general, but take the maintenance factor aside for a moment. What's the harm in adopting a more cautious revenue projection for the state? Why shouldn't either you or the governor or the legislature be more cautious and take the worst case scenario?
Well, I think you can make an argument for that. I would just, we would rather do our best revenue and try to agree this is what we think the revenues are, and then deal with the risk through the reserve.
But when you don't have, when you have $1 billion in reserve, you run into a lot of difficulties there. I mean, aren't you gambling?
Well, that's what I'm saying, though, that if you're saying, well, should we just not, we think revenues are going to be here, but be cautious and say they're going to be here, that's not going to necessarily breed confidence from folks like you or the public that, why aren't you giving us the best shot? If you think revenues are here, you can still budget for that risk by increasing your reserve. And I think that would be the more direct way to do it.
So base your projections on more revenue, but increase your reserve in case you're wrong. That's your advice.
Absolutely. And in response to your question, we're saying that because of the maintenance factor, it doesn't give you that option. So we're sort of maybe passively saying, well, okay, we would understand why you might not want to take our revenues if you don't want to give yourself that kind of flexibility.
So if they're wrong and you're right, and at the end of the year, there's another couple billion dollars in the kitty.
Well, it won't be in the kitty because, again, if you don't change the maintenance factor, it'll have to go to
They can't
schools.
move that into 14, 15.
Well,
They can't just-
it will have created an obligation for schools that we'll have to pay off at some time.
Regardless, okay.
Now, maybe we could pay it off over a longer period.
Right, but it still has to be paid off.
It still
If
have to be
comes
paid.
in that fiscal year, it has to get paid off.
It would have to make a commitment to pay that off.
What size of reserve would you recommend?
Well, I think there's a different answer for the longer term. I mean, I don't think you want to go up to 10% right away. But I think a lot of the members and some of the ACA 4 that is scheduled to be on the ballot would increase it to 10%. I think that's a fairly good longer term goal. You don't want to do it right away, but I would certainly think this is the time that we can start building up. I'm not suggesting every free dollar that you might have, no matter what sort of 98 maintenance factor interpretation might adopt, should go into the reserve. But as I said, we know that a lot of these revenues are related to capital gains under either the administration's or our proposal, and those can turn south on you quickly. So we would hope that we could put a big chunk of those. Maybe you build up a couple % a year so that by the time you hit the end of the business cycle, maybe you're closer to that 10%.
Sounds like what the Assembly Dems and the Speaker are calling for with their rainy day fund proposal.
I think that's partly true, and it's really what was in place with what the voters approved in Prop 58, where you set aside 3% each year. It's just that we've never gotten a position when you're digging out of holes you don't put reserves in. So 58 has really never had a chance to sort of even try to see if it operates well, but it's the same principle that you build it up over time when you're in recovery.
I didn't get to the health and human services part. You didn't really touch much on it.
No, I didn't.
But in terms of the idea of the counties are going to save money, so we're going to give them $300 million less for their safety net programs, and then we're going to get it all trued up later. I mean, do you think that $300 million there's actually going to be savings to the counties, anything close to that?
Yeah, I mean, I think that could be a very reasonable number. That's kind of what we had estimated. And again, I think it should be open with negotiation and discussions with the counties and in various groups. But in February, we came out with a proposal that would just capture the savings, but without the realigning new programs. The governor, as far as we know so far, it would actually realign fiscal and some programmatic responsibility. We just use the mechanism of realignment to capture some reasonable level of savings. And so we think you can get the savings. We're concerned that in the short time left between now and when a budget has to get done, can you do this new proposal that they just put on the table with lots of details that we're not even aware of yet and would have to be worked out. But yeah, I think that's clearly if, with the ACA taking effect at the start of the year, and if we do the expansion, counties will realize some level of savings even in 13-14. So it's certainly not unreasonable to capture some piece of it.
I have a question about the revenue estimates, the maintenance factor thing. So if you use your higher estimates, most of the money will go to schools, the maintenance factor interpretation, I kind of understand that. But if you use a lower estimate and revenues come in higher, would that not need to go to schools at the same level? Or would you would have more flexibility in the time being?
I'm sorry, if you use like the governor's estimate and revenues come in higher,
right,
you'd still have to, a lot of that would go to schools.
Right, okay. There's really no way to avoid the schools thing.
Not under the current interpretation.
Right.
Is that Jen, and is that fair?
A lot of Democratic lawmakers and social service advocates have been very excited about your higher estimates. What would you tell them about how to take this news?
Well, I think that's what we've been talking about, in effect, that first of all, because the vast majority under our revenue estimates has to go to schools, there's very little left over.
But there's still roughly $1 billion.
Well, there's like, I think 750 or something like that.
So I mean,
over 3 years.
Well, but it would be available, I think, in the budget year. Jason, is that right?
I mean, dental care for Medi-Cal is like $150 million. I believe.
But again, let's remember then, though, that the added risk now that you've adopted, you've increased school spending, and now you want to increase, if you use most of that money for added spending on the courts or for things that you mentioned, which certainly there is a lot of demand for that, and the leadership would like to spend some on that. Then what happens if we're
What happens if we're what?
what happens then if our revenues don't materialize to the level that we had estimated?
So given all these caveats, I mean, you're putting out this number and people are seizing on this number. Is there a concern there? That
Yeah, and I think that's what we've tried to make clear, that you need to be very careful. Again, the qualification, I have to continue to add this. If you're going to keep with the current interpretation on the maintenance factor, you have to be very careful about how you spend additional monies.
One more question on the maintenance factor thing. So if, the high revenues come in and the money goes to schools under the current interpretation of the maintenance factor, does that increase the base level in 14-15? So basically the state would be on the hook going forward.
It would increase it.
Can they really change that easily, the maintenance factor? Is it
Well, it's not
Prop
changed.
98 or?
It's not changed. It's not. It's a question of. It's not really clear exactly how it can work. People can have different opinions about it, but it was done through, language in statute. It's not clear constitutionally. It's not like we're proposing a constitutional amendment. It's just saying this is an approach that we think is both reasonable, in keeping with the current way it's written. It makes sense. It doesn't advantage or disadvantage schools. And we think that through just simple statutory language, that this is why we're doing it this way, could be done.
It wouldn't impact the Prop 98. You wouldn't have to go to the voters.
No.
To make any,
Not in our view.
you can do, in your view, you can.
Yeah, I mean, that's the way it was done at the start of the year. There was no, but didn't go to voters to say this is where we're going to implement it.
Are you suggesting that this governor is taking a different approach to maintenance factor than previous governors?
Well, it had never really come up to this level because of the situation of having large maintenance factor being in a test 1 year. So it came to sort of a head at the start of this year. The administration proposed this point of view, and the legislature adopted it.
And so this issue's never been litigated?
No, not as far as I know,
But
Jim.
it could be.
Oh, anything on 98 could be, and I think the question about is there legal liability is a fair one. And sure, anybody could. We just think that you can make a strong policy basis. If you understand 98 and the way it works, which our folks have spent a quarter century doing, that we think we can make in fact, we think we can make a much more reasonable case on our interpretation than administrations. We think we did it last year. But again, we're just raising it because the issue is so important for understanding why you have to be careful about these new monies, and why it is. I'm sure many of you were wondering when the budget came out of why is the budget not really better off when you have all these new monies?
What's the governor's flexibility if he passes a budget that has those revenues? What's the governor's flexibility on the line item vetoes to put some more of that money into the reserve? And can the legislature override the line item?
Well, the revenues have to be included in the budget bills passed. So I think it's something that in effect has to be agreed upon by the governor and the legislature. Unless they were to override. I mean, they can't always do that.
They can override the overall budget bill if the overall
But I'm
budget
saying
bill
that you have
but not the line items, right?
Well, I don't know about that, but practically speaking, that's part of the budget bill that's passed is an agreement on what the level of revenues is.
Okay.